Steps of computing total income and tax payable in income tax. Quick and summary explanation for everyone. Our presentation. Crisp explanation. Quick explained. Brief. Stepwise. Overall view. Levied of tax. Assessee's total income. IT Act 1961 provisions. Broad view. Cess and surcharge. IT rates and AMT. Residential status. Steps involved. 1. Determination of residential status. 2. Classification of income under 5 heads of income. 3. Computation of income under each head. 4. Clubbing of income of spouse, minor child, etc. 5. Set off current year losses and B/F losses. 6. Computation of gross total income. 7. Deductions from gross total income. 8. Computation of total income. 9. Application of rates of tax on total income. 10. Surcharge and rebate. 11. Health and education cess. 12. Examine applicability of AMT, alternate minimum tax rate. 13. Examine oppotent to exerciise under Section 115 BAC for concessional tax slab rates. 14. Credit for advanced tax TDS and TCS. 15. Tax payable/refundable computation. 16. Filling return of income. Step 1. Determination of residential status. The residential status of an individual has to be determined to ascertain which income is to be included in computing his total income. In the case of an individual, the duration for which he is present in India in the relevant previous year or relevant previous year and the earlier previous years, as the case may be, determines his residential status. Based on the days spent by him in India, he may be a resident or a non-resident. Resident, resident and ordinarily resident. Resident but not ordinarily resident. Non-resident. Note, an Indian citizen who is a deemed resident in India would be a resident but not ordinarily resident in India. Step 2. Classification of income under 5 heads of income. An individual may earn income from different sources. Under the Income Tax Act, 1961, for computation of TI, all income of an individual taxpayer can be classified into 5 different heads of income, as follows. Salaries. Income from house property HP. Profits and gains of business or profession PGBP. Capital gains CG. Income from other sources IOS. Step 3. Computation of income under each head. Income under each head shall be classified separately. Exemptions need to be overlooked if any. Deductions allowable under that head shall be provided. Income Tax Act 1961 provisions in detail shall be referred for computation of income under each head. Step 4. Clubbing of income of spouse, minor child, etc. In case of individuals, income tax is levied on a slab system on the total income. The tax system is progressive, i.e., as the income increases, the applicable rate of tax increases. Taxpayers in the higher income bracket have a tendency to divert some portion of their income to their spouse, minor child, etc. to minimize their tax burden. In order to prevent such tax avoidance, clubbing provisions have been incorporated in the Act, under which income arising to certain persons, like spouse, minor child etc., have to be included in the income of the person who has diverted his income for the purpose of computing tax liability. Step 5. Set off current year losses and brought forward losses. An assessee may have different sources of income under the same head of income. He may have profit from one source and loss from the other. Similarly, an assessee can have loss under one head of income and profits under another heads of income. There are provisions in the Act for allowing inter-source and inter-head adjustment in certain cases. The losses are allowed to be set off in the following series. Inter-source set off of losses. Inter-head set off of losses. Set off of brought forward losses. Set off of unabsorbed depreciation. Carry forward of losses and unabsorbed depreciation. Step 6. Computation of gross total income. Gross total income equals add income computed under each head. Add income computed under each head. After applying clubbing provisions and after applying the provisions for set off and C/F of losses. Step 7. Deductions from gross total income. There are deductions under Chapter 6A prescribed from gross total income. These deductions are of following types. Deductions in respect of certain payments. Deductions in respect of certain incomes. Deductions in respect of other incomes. Other deductions. Income Tax Act 1961 provisions in detail shall be referred for deductions. Step 8. Computation of total income. Total income equals gross total income, deductions under chapter via. Rounded off to the nearest multiple of 10. For deductions under chapter via refer Income Tax Act 1961 provisions in detail. Step 9. Application of rates of tax on total income in case of an individual. Up to 2.5 lakh, in case of an individual below 60 years. Up to 3 lakh, in case of an individual who is 60 years or more but less than 80 years and resident in India. Up to 5 lakh, in case of an individual who is 80 years or more and resident in India. Nil. 2,50,001 or 3,01, as the case may be. 2. 5 lakh. 5%. 5 lakh and 1 to 1 lakh. 20%. Above 10 lakh. 30%. Step 10. Surcharge and rebate. I. Where the TI, including dividend income and capital gains chargeable to tax U/S111A and 112A, are 50 lakhs but less than or equal to R1 crore. 10%. 2. Where TI, including dividend income and capital gains chargeable to tax U/S111A and 112A, R1 crore but less than or equal to R2 crore. 15%. 3. Where TI, excluding dividend income and capital gains chargeable to tax U/S111A and 112A, R2 crore but less than or equal to R5 crore. 25%. The rate of surcharge on the income tax payable on the portion of dividend income and capital Gains chargeable to tax U/S111A and 112A. Not exceeding 15%. 4. Where TI, excluding dividend income and capital gains chargeable to tax U/S111A and 112A, are 5 crore. 37%. Rate of surcharge on the income tax payable on the portion of dividend income and capital gains chargeable to tax U/S111A and 112A. Not exceeding 15%. V. Where TI, including dividend income and capital gains chargeable to tax U/S111A and 112A, are 2 crore in cases not covered under 3 and 4, above 15%. Rebate under Section 87A, rebate of up to R12,500 per resident. Individuals having total income of up to R5 lakh. However, rebate U/S87A is not available in respect of tax payable at 10% on long-term capital gains taxable U/S112A. Step 11. Health and Education cess on income tax. Step 9. Income tax. Health and Education cess 4% of income tax and surcharge, if applicable. Total tax liability equals tax on total income at APPLIC of LE rates plus surcharge at applicable rates. If total income are 50 lakhs or plus HEC at 4%. Rebate U/S87A. If total income less than or equal to R5 lakh. Step 12. Examine the applicability of AMT. If an individual is claiming DIN U/S10AA or U/S35AD or Section 80J AMT. If an individual is claiming DIN U/S10AA or U/S35AD or Section 80JJAA, 80QQB and 80RRB and his adjusted TI exceeds R20 lakhs, AMT provisions will apply. Compute AMT 18.5% of adjusted TI plus surcharge, if applicable, plus HEC at 4%. If AMT tax computed as per regular provisions, adjusted TI would be deemed to be TI. Tax is leviable at 18.5% of adjusted total income plus surcharge, if applicable plus HEC at 4%. Tax credit to be C/F equals AMT less tax computed as per regular provisions. Individuals exercising option U/S115 BAC are not liable to alternate minimum tax U/S115 JC. Step 13. Examine whether or not to exercise the option. Under Section 115 BAC for availing concessional tax slab rates. As per Section 115 BAC, individuals have an option to pay tax in respect of their TI, other than income chargeable to tax at special rates under Chapter 12, at following concessional rates, if they do not avail certain exemptions/deductions like LTC, STD deduction under the head salaries, int. On housing loan on self-occupied property, deductions. Under Chapter 6A, other than ADCCD, 2, or Section 80JJAA, set off of B/F loss or depair, if they relate to any of the above didnts, set off of loss from house property against income under any other head, etc. Total income tax rate. I. Up to 2.5 log nil. 2. From R2 log 50,000 and 1 to R5 log 5%. 3. From R5 log and 1 to R7 log 50,000 10%. 4. From R7 log 50,000 and 1 to R10 log 15%. V. From R10 log and 1 to R12 log 50,000 20%. 6. From R12 log 50,000 and 1 to R15 log 25%. 7. Above R15 log 30%. Surcharge would be attracted at the same rates and above the same thresholds of TI as under the regular provisions of the Income Tax Act, 1961. Further, HEC at 4% would be attracted on income tax so calculated plus surcharge, if applicable. Examine the tax liability computed under the regular provisions of the Act, including provisions relating to AMT, if applicable. Step 14. Credit for advanced tax, TDS and TCS. Net tax liability equals total tax liability, TDS, TCS, advanced tax paid. Refer Table 5 for advanced tax. Step 15. Tax payable/tax refundable. Net tax liability should be rounded off to the nearest multiple of R10. The assessee has to pay the AMT of tax payable, called self-assessment tax, at the time of filing of return of income. If any refund is due, assessee will get the same after filing the return of income. Step 16. Return of income. The Income Tax Act, 1961 contains provisions for filing of return of income. Return of income is the format in which the assessee furnishes information as to his total income and tax payable. The Act has prescribed due dates for filing return of income in case of different assessees. An individual is required to file a return of income in the prescribed form, ITR 1/2/3/4, as the case may be, as applicable to him, if his total income exceeds the basic exemption limit or he fulfills certain other conditions.
Thanks for watching. Do like, share and subscribe. Comment in comment box interested topics. Press the bell icon. Thank you.